Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 8th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I will go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. Phone lines are open. And if you can't call in, well, we've got you covered there, too. You can go ahead and send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. All the indices trading in the green to the upside. The Dow's up 113, nearly 0.4% to the upside. The S&P nearly 0.3, that's up 10 points. NASDAQ is nearly 1/10, that's 12 points. The upside. Russell up 19. Semis are up 1.5. You've got the spot volatility trading out at 2093. It still has a slightly rising bottoms pattern out there in the face of a slightly rising S&P 500. That's not a good divergence. It can be busted, but watch the spot volatility index close. Maybe we'll take a look at that chart here. You've got gold up $11. Silver is back 2 cents. Light sweet crude off 12 pennies. Natural gas is up nearly 2 cents out here. Leading the charge dollar-wise, the upside. IGM Bioscience is up $38, 52%. Snowflake up 32 or 8%. Mercado Libre 26, nearly 2%. Equifax 14, 8.5%. Stitch Fix up 14. That's 41% to the upside. To the downside, the shakers, AutoZone shaking the trees, 65 buckaroonies off nearly 6%. MicroStrategy, not a very good strategy, off over 10% or $34. Booking Holdings down 29. Penumbra off 27 or 12%. Arcturus Therapeutics down 17, that's off 21. So we got plenty to look at. Of course, I want to look at what you want to look at. So what do you want to look at? You know what's interesting about this market here? Many things are interesting. So one of the things so you've got the Dow in essence, I was going to say leading, but really it's Russell 2000 percentage-wise out here. But if we take a look at the global flow of capital since the election, and that's what this table here represents. So we've had 24 days since the U.S. presidential election. And what we're looking for here is to see if we can identify where it is global capital parking itself somewhere. Now, based upon today, the first 24 days into it, the answer would be it's parking itself in Brazil. That's up 31% in terms of U.S. dollars in that time period, up 27% in terms of euros, 27% in yens, and 28% in terms of pounds. That's been the winner chicken dinner out here. The next winner out here in second place would be Mexico. Yeah, Mexico's up 23% in terms of U.S. dollars and up 19 to 21% in terms of the other major currencies. Third place trophy goes to India, up 13% in terms of, I take that back, goes to Canada. Nope, I take that back. Goes to the U.K. Yeah, okay, we got it. So the U.K., which is up 17%. Since the U.S. elections. Here's the point. There is no concentration of cash inside the U.S. market from an international capital flow standpoint out there. So with that being the case, that then says, hey, you know what? with that being the case, I know I just said that, but I just repeated it, we have to give, or we should give, a lot of respect to all of these topping signals that we have on the daily time frame for the U.S. cash indices, the equity futures contracts, some of the sectors within inside the S&P 500, so we got the Rhodes Momentum Indicator signals, we've got all of these TD9 counts, any of them with the stars 9, 8, or the bar number 1 out here, like in the semiconductor index. Each of these are topping signals. We have topping signals there. We have topping signals around the globe. I showed this market analyzer during that 1 p.m. update, but that's a very quick segment. So, and sometimes you don't catch that segment. Here is many, not all, but many of the major international markets via their ETF structures out here. And the leader, as I mentioned, was Brazil. That's the EWZ. Is that right? EWZ. Which has got a TD9 count top. You can see that right here, EWZ. So that even, with that being the leader, that has a valid TD9 count pattern that is out there. So now the nice thing about those patterns is we know that if price closes above the high of that pattern, that tells us about a strong momentum move to the upside, and you would not want to be short the market. Very similar to the message coming from the ES Mini right now for its 30-minute time frame. On a 30-minute time frame, the bar that finished at 1 p.m. was the bar following bar number 9. So what you and I know is that if we see the ES Mini close above 37.0325, that tells us about a strong momentum move to the upside. Otherwise, it has a valid topping signal right now. Now, not each of the 30-minute equity futures contracts have that. For example, if we take a look at the NQ, what the NQ did today, it made an A to B equals CD to the downside. It made a Gartley buy pattern. Here's what the A to B equals CD pattern would look like out there. Stevie can go ahead and draw that in for you. So there's the 1 to 1.272, A to B equals CD. It finished right at its TD9 breakout level, 12, 5, 10, 50. That is a stock or price coming back to test its breakout level. That is a bullish signal. So the message here in the NQ, it's bullish. Price pulls back, makes a Gartley buy pattern, tests its TD9 breakout area. Now look, folks, I can guarantee you only one thing. Well, two things. The first thing is I'm going to give you my best no matter what. Doesn't matter how I'm feeling. And I'm feeling fine, by the way. Thanks for asking. But I'm going to give you my best. So that's one guarantee that I can give you. I'll give you my best, honest interpretation, narration of what the charts are communicating to us. The second thing that I will guarantee you is nobody would have picked 12, 5, 10, 50 as the breakout level for the NQ on a 30-minute time frame. Nobody. Not even Stevie's son here. Now, of course, I didn't pick it out, but the TD9 count did. You want to learn this pattern. If not just for the potential top and bottom signals, most certainly for being able to understand where breakout support and breakdown resistance is. So please learn this pattern. You can easily do that. Just subscribe to Mastering Probability. You can do it for 29 days. You've got all kinds of access to workshops out there. But please learn this and apply this to your charts, your time frame out there. And do I sound bullish? No, Ruby, this is really just the stock market. And if I sound bullish, the stock markets are bullish, but they all have these topping signals. This is a very important time to be careful these next couple of days out there. So, Ruby, thank you for posting that. Steve, you sound bullish. We must give respect to all those TD9 and RMI topping signals, and let's see how the market trades for the next couple of days out here, because there's topping signals all over the place. Whether they take hold or not, we'll know within the next couple of days. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 115, S&P is 10. Let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing on Terrific Tuesday?
Oh, I'm doing just great, Steve. And how about yourself?
Doing well. Thanks so much for asking. And we're going to take a look at Occidental Petroleum, I believe, currently traded out at $18.95. Looks like it's gunning for the $24.43 level out there. Brent, how can I help you?
I just don't see a particular reason to exit the trade. I see some reasons to stay in the trade. It looked like it did a test of Stevie's green line back on, I think it was Tuesday or Wednesday of last week. I did a test and rejection of that, which was a positive. It's above a lot of different resistance levels. I am seeing something on a weekly chart. There's a level right about where it's been today.
Yes.
That's the 50-day moving average that has not been above for quite some time. And so that seems like one last potential area that it could run into. It's I have that at 1905. But other than that, I'm just not really seeing a reason to bail on it. I see reasons to stay in it. I just wanted to get your thoughts on it.
No, absolutely. That's good analysis. So on the weekly, let's just start with the weekly chart. Since you had mentioned that, I don't have the 50-day moving average on there. That's okay because you covered that. The level to be watching this week is 1883. So 1883 is the TD9 breakdown resistance level. And if price can close above that this week, very much like you pointed out on the daily time frame charts, that would be a nice little victory. And that would then say, okay, price is likely to go ahead back to its swing point from back in June. Looks like the week of June 24th, and would be targeting the 2450 type level. That might be what I said on when I was looking at the monthly profile levels. I can't recall, but that would be its target in looking at the weekly chart. So no topping signal, even if price does stall here and can't get above 1883. That doesn't mean that it won't. It just means that it didn't on its first weekly attempt. But that's what it's dealing with right now. The daily time frame, as you pointed out, it has cleared 3 TD9 breakdown resistance levels. Just clearing the first one was your indication of a change in trend, but it's cleared these, signaling to you and I that price wants to go back towards that prior swing point high. Price is stretched, meaning that price is moving higher, doing it with less relative energy. But Brent, that only becomes a problem if first it generates a bearish reversal candle, and then second, that any retracement closes below the oscillator and change line, which currently is printing at 1703. So we don't know whether that will happen or not. We know what to look for should something like that unfold. But yes, on the daily, there is no signal to jettison the position. On the weekly, there's no reason to jettison the position. And on the monthly, 2443 was the top of that profile out there. And it looks like that's really where price is headed to. On a quarterly basis, you're going to have a TD9 count bottom. Now, the year's not over yet. It's only December the 8th, but looks like Occidental Petroleum will generate a nice quarterly TD9 count bottom. And on a yearly basis, the pullback was right back, hard to believe, but right back to the TD9 breakout level on a yearly basis, which was 1102. It's a beautiful thing. Any other questions, Brent, or anything else that maybe I can provide for you on Occidental Petroleum? But it looks pretty good, doesn't it?
It does. It's been acting pretty well. I do appreciate your analysis. That's what I was hoping for, and I just, always thankful for your help and you going through the process and looking at the different variables
sure.
that make a difference. So, just have yourself a wonderful day. I appreciate it. Just have a great week, and I'm sure we'll have a chance to talk soon. You take care, Steve.
Sounds great. Thanks for the call. That was Brent in Martinez, California, and that was Occidental Petroleum. We're going to go to Mike in Ormond Beach and talk about the Qs. So, Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing great. Hey, I'm looking at the Qs, and I agree with what you said. Everything looks toppy here. And I'm looking at shorting the Qs, either the QID or one of the other ETFs. And one of the biggest things I'm looking at is the August 31st price point. It looks like we took that out with a lot less volume on a weekly chart. And another thing, which indice do you think is going to be the best one to short if we do confirm a top around these next couple days?
Sure. So that's a great question. So with regard to the NQ and its potential for a top, yesterday it generated bar number 9 of a TD9 count. We've made a slightly higher high today. So what we know is that the top can form. If a TD9 count is going to identify a top, folks, it'll be bars 8, 9, or the bar following 9. So that makes today's high, Mike, whatever it is, the important high. Because if price closes above today's high tomorrow or Thursday or Friday out there, then we wouldn't want to be short because it tells us about a strong momentum move. And that strong momentum move in the NQ, we'd then just immediately go to the consolidation breakout level. So you are in wave number 7. That's letter G. So we're in wave number 7. We entered wave number 7 yesterday along with a TD9 count. So you've got your 2 topping signals. Now we know wave number G needs to be confirmed by a lower high tomorrow or the next day if it makes a higher high. So there's some topping signals out there. But here's the thing about the NQ. Price is trading. It hasn't even tested the oscillator and change line. It's well above that level. So the question is, are the Qs the right place to short or not? Because, as you said, you were in essence asking the question, hey, what would you short? And I would take a look at the ES Mini. And in the case of the ES Mini, here we can see that price is just hanging out at its oscillator and change line. Earlier in the day this morning at about 8 o'clock, as the ES Mini on a 30-minute basis was making an A to B equals CD to the downside pattern out here. That was at the lows. Price above Stevie's green line. I would so the way I would answer that question is it would be based upon whether or not there are any new market profiles that formed in the daily equity futures contracts. If we do have some, then that would help us because you'd have another form of resistance at your back. But as we take and early this morning, the ES, the Dow, and the Russell were each trying to form new market profiles. But now that we look at the charts, this is updated data, we don't have any new profiles. So it's a toss-up, Mike. I mean, if the answer to your question, it would be a guess. As to which one might decline the most. I think the trade setup is better for the ES right now than any of the other 3 out there. But the NQ and the ES both have topping signals that you could absolutely short.
Right.
Does that help?
And one of the most important things that you taught me is I don't really fire off until I see the bearish candlestick signal. And,
Yeah.
and
Which
then,
is a good
of course, then breaking the first support area. So thanks again for all that you taught us. And
yeah.
keep
So
up
let's
the
do
good
this
work.
here. In the NQ, I'm just going to give you the NQ, though, just to complete it here with about 10 seconds to go. So I wouldn't short the NQ right now because it doesn't, on a 30-minute basis, it doesn't have a topping signal. So it looks like the NQ wants to continue to move higher, and it's taken out its TD9 count from about 11:30 yesterday morning. So it wouldn't be the NQ that I'd fire away right now. The S&P could be a different story. All right. Hey, Mike, thanks so much for calling, and we'll look forward to speaking to you again soon. That was Mike in Ormond Beach. When we get back from this break, we're going to go, I'm not sure where we're going. I think we're going to take some YouTube questions. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Folks, you got the Dow up 121. The S&P is 11 and points to the upside. And Boston Dan, there's only one king here at TFNN. And that king happens to be the U.S. dollar index. And that was earlier, there was a question about, I had posted a statement in the den, the king at bottom. That was for Maria. in New York. And so if we take a look at the U.S. dollar index, you'll see a TD9 count bottom from 2 days ago. And then yesterday, you got what you really wanted, which was now, you sort of got what you wanted. First thing you had yesterday was price ran up to Stevie's red line, the oscillator and change line. Beautiful thing, isn't it, folks? It is. That's another tool that you absolutely want to be able to learn out here to help you understand what the markets are communicating to. So, hey, testing and rejecting a red OUL, not a good thing, but it tells us really about kind of a neutral area we're in right now. That's resistance. You don't have to guess that. You know the oscillator and change line right now printing out at 91.20. But what you also had occur yesterday was a bullish structured daily profile. So if you want to take a long transaction U.S. dollar, right now is the time to do it. Again, with the TD9 count pattern, the beauty here is that you would go ahead and close it out if you saw a close below 90.47 out there. Now, when Mike and Norman Beach had called, this is the exact opposite of, in essence, what I was looking for him, which was in going ahead and shorting any of the equity indices out there. What you'd like to have is you'd really like to have sellers at your back. Here in the buying the U.S. dollar index, you want buyers at your back. Well, a bullish structured profile gives you those buyers. Whether or not they're going to be enough of a defense to hold whatever offense is coming at them, that you and I don't know. But if you're looking for probabilities, if you're looking where you've got the wind truly at your back and trying to buy a bottom out here, well, then the U.S. dollar index chart is one of those chart patterns that tell you to go ahead and do so. So Boston Dan, it really isn't Stevie saying the king has bottomed. It's really the charts that are telling us that the king has bottomed. And this is the type of pattern that you love to see here. Again, not that it's guaranteed that it's going to work, but you've got everything that you could ask for. We didn't have that inside the equity futures contracts, at least not at 132, because it didn't have those new market profiles that Stevie was looking for. So that is the only king that I'm aware of that we talk about here at TFNN. We had a couple requests to go take a look at. First was from YouTube. First was to take a look at that Tesla out here. And I think the question was, where is an entry point out here? Well, if there were to be an entry point along this big move higher out here, what we would say would be it would be Stevie's green line. So that'd be 594 and change out there. As price moves up, that number will move up slightly. As price moves down, that number will move down slightly. But that would be your entry point out there. Here's the TD9 count. Price got above that yesterday, telling us about a strong momentum move to the upside. Well, Stevie, what's a strong momentum move to the upside mean? Look, that's a great question out there, and thank you for asking it. Don't you love how I can just talk to myself out here as if I'm having a normal conversation? There is nothing normal about my conversations. But if we take a look at Tesla out here, you can see that this has that measured move consolidation breakout. And so if you're asking where's Tesla gunning for, it's going to be in that 680-ish type range. Don't hold me right to the tick or anything along those lines. But when you break a consolidation, which Tesla was in, it then offers you a measured move. The measurement is the consolidation. And so the move is usually equal to or greater than the consolidation. With price being above all profiles out there, that is our best estimate as to where Tesla is headed to and the best estimate for an entry price. So I hope that helps you out. Thanks so much for listening to us on our YouTube channel here at TFNN. There was also another question, I believe it was Ian Miller, who was taking a look at Fuel Cell Technologies. FCEL is its ticker symbol here. And this is trading above all of its profiles too, daily, weekly, and monthly. So let's go put up the Fuel Cell charts, see if there's any other piece of information. Now, what Ian was looking, just interested in Fuel Cell because of its volatility. So this generated a Rhodes Momentum Indicator top when price gapped down about 4 or 5 days ago. But, boy, that was like a one-hit wonder. Price above Stevie's green line out here. If it can complete the gap, which means if it can close above 901, and you're trading at 897, if it can close above 901, it will have repaired the broken window. You know, like playing baseball. Have any of you done that? I can raise both of my hands. That was not intentional, but we were just young kids playing baseball in the streets, and you pull a ball down left field line, and you'd hit the Smith's house. And occasionally, you'd put it right through the Smith's window out there. Well, you've got to repair those broken windows. And in the case of the equity markets out here, it's a gap to the downside. Now, the window gets repaired. chart. So your natural resistance level inside a fuel cell is going to be the bottom of that gap. That is 901. If price can close above 901, that no longer becomes your resistance area, and price heads back to its highs out there. On a weekly chart for fuel cell technologies, what do we have out here? We don't have any kind of bottoming signal, or topping signal, I should say, other than price did run into its resistance, its natural resistance area. That was the TD9 breakdown area at 1086. So if you're wondering why did price stop where it did, well, it was because of that resistance level. So getting above 1086, boy, that would be a nice positive for you on the weekly time frame. Nothing here on the monthly for us to take a look at. So again, a YouTuber, thanks so much, Ian, for writing in and asking about that. So let me see, do we have any other questions? Let me just check the email lines here. We didn't have anything earlier, but if we do have something, I want to be able to go right to it. And I don't see anything just yet. So you know what I want to do? I want to go take a look at light sweet crude. I just see a couple that have come in here. LB and Eddie. But before I do that, John in New York yesterday had called, and he was taking a look at the Vanguard Energy ETF out there. And he was using light sweet crude as one of his proxies to make a determination whether to stay in the trade or not. And yesterday I said to him, hey, I don't see any kind of a top. And that was true. Not until the end of the day. So the end of the day, so here's a daily time frame chart here. So John in New York, hopefully you're listening. You did get a confirmation of a Rhodes momentum indicator top. Price was moving higher, doing less relative energy. And yesterday you got the bearish engulfing reversal candle. Now, that doesn't mean to exit your position. It means to tighten your stops. Because what then price did was it moved down and it tested Stevie's green line, the oscillator and change line. And as long as price holds that level, which right now is printed at 45.20, light sweet crude still remains bullish. We can classify this little range that it's in between 45.20 and the high from 2 days ago, the high of that bearish engulfing sessions, so to speak, at 46.68. That's your neutral ground. What's a neutral ground? There'd be no reason to sell. But I wanted to be able to update John on that, since he was using light sweet crude as a proxy for that trade out there. And just says just continue to watch closely. Tarpon Springs out there wants to take a look at PLN. NHF. That's a lot for me to write in here. You can see I can't even do it very well. We'll try it again. PLNHF out there, which, geez, my system, that is Planet 13 Holdings. Planet 13 Holdings out there. PLNHF. I have to repeat that to myself so I can type it into my other system out there. You folks, you know what's going on when you hear me duplicate my conversations out there. But we can see that the planet is it's in its own constellation out here. It's trading above all your profiles, your daily, your weekly, and your monthly profiles out there. So we get back from this break, we'll go see if there's any kind of topping signals, or if Planet 13 is headed to Planet 14. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services, and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we take a look at Planet 13 Holdings out here. This is the daily time frame that we've got, and no bottoming, no topping signal that we have whatsoever. Oh, I can't say that completely. So let me take that back. Tarpon. Today's current candle session is a bear sash candle. I don't know how today's candle session will end. But if it does, you and I can clearly see an A to B equals CD pattern. I don't have it drawn in here, but you start from the middle of September, bar number 8 of the TD9 count. I take it up to the TD9 count top and then pull it down to where it bottomed. And we've got probably a 1 to 2 or 1 to 2.618, A to B equals CD to the upside. So the bearish reversal candle today would suggest that we would see price pull back and test, if we get the bearish reversal candle, pull back and test the oscillator and change line. So look for a pullback into around the 525-ish type area out here. If you don't get a bear sash candle today, then price really doesn't need to pull back to test the oscillator and change line. Not that it can't, but it won't be giving us a signal that sellers are intending for that to take place. Kind of makes sense out there? I hope so. And if it doesn't, I apologize. If we take a look at the weekly time frame chart, price is stretched, but not until we see a bearish reversal candle. Will that be important? Let's see. We've got a wave number 7 signal, but again, that can extend itself. I'd be watching for a bearish reversal candle. We don't have that this week, not as of this stage. And on a monthly time frame, not a lot of data out here, but the data that we do have does not give us any kind of a signal of a top. So with regard to Planet 13, it could be forming a sell the D point today, and the first level or its first target to the downside would be 525. Below that, shoot, this thing could pull all the way back to 363, and there would be nothing wrong with it other than a 50% haircut out there. So watch as price pulls back to that oscillator unchanged line. Tarpon, I hope that helps you out. Thanks so much for writing in. LB writes in, and that is Lee. Can we take a look at URA? And we can. URA is a uranium stock. Uranium ETF. How about that? And could you please look at it? Give me your short and long-term targets. Currently long. And so your long price is above daily, weekly, and monthly profile. So we know it's above all kinds of resistance. Of course, those areas could be support. So that first level, it'd be support ranges between 1195 to 1259. That would be your support range. Those are the tops of the profiles. That was the top of the daily and the monthly profiles out there. But let's go take a look at, the question is, what's the short-term view? So for the short-term view for LB, we're going to use daily. So what is the message from the daily charts? The message from the daily chart is, boom, TD9 count top yesterday. Today, you've got a dark cloud cover. No idea whether this will continue to be a dark cloud cover as long as price closes within halfway, the midpoint of the body of yesterday's candle. Let me repeat that. not the entire session, the body of yesterday's candle. As long as price closes below the 50% level of that candle session, I'm not going to calculate that for you. You'd have a dark cloud cover confirming a sell the D point. Now, in its case, that would also suggest to you and I that URA is going to go target its oscillator and change line because that is above the top of those profiles. So 1264 in that area becomes your price target. This made a real nice Rhodes momentum indicator bottom with that bullish engulfing candle. That's the daily time frame message. You also wanted to understand what the longer term. So longer term, we've got the weekly out here. What do we see on a weekly basis? Everything looks good here. So it's the daily just saying, hey, I need to take a little bit of a rest here before I charge up. So the longer term charts, nothing looks bad. It's the daily that's giving you, in essence, two topping signals. Those should generate a move back to the oscillator and change line in that 1264 area. So LB, thanks so much for writing in. Hope you're doing well, and best of luck to you on that trade in URA. Eddie writes in, and Eddie says, why would shorting the S&P be something to consider if it broke 3,700 and held 3862.50 you spoke of yesterday? Well, that's a mouthful. We're going to go answer Eddie's question, at least the best we can. Now, he threw out a figure from yesterday. Oh, that could be more difficult. So I can't deal with not that I can't deal with it. I can deal with it. But the 3682 from yesterday, that was yesterday's information. Remember Stevie says this, don't be a prisoner of your past. That wasn't directed towards Eddie. That was directed towards Stevie. But what we're talking, so let's get back to Eddie's question here. The question is a real valid one. And Eddie's looking at this chart. He said, hey, you know what? Stevie's got the TD9 breakdown level at 3,700. It's not Stevie. It's the charts out here. And price closed just above that area. Doesn't that mean that price is going to break out? It could. That could be a meeting. For me, Eddie, the patterns are more important. You would have preferred to see the TD9 count. You're right. Very astute on your part out there. You would have preferred to have seen the TD9 count pattern form below the breakdown level of 3,700. But you don't always get what you want out there unless you are Mick Jagger. And in the case of Mick Jagger out here, he's still saying, hey, this is the short trade setup. Again, it was present. It's present now, providing it to our dinners out there that are taking a look at shorts out here. And it's the ES that had the best pattern. It's still a valid short. It remains a valid short unless we see a closing above the high, which is a bar number 10 in essence, which is 3703.25. I don't care if price tests it and rejects it. The question is, where does it close? So, Eddie, and it was a combination of that and the other pattern. The other pattern is this. When Stevie's red line or green line changes color, like a chameleon, not a comedian, but like a chameleon out there, it tells us of an impending hookup. The type of hookup where price and that line will test each other. And that is going to unfold out there or should unfold out there. So with that TD9 count top, that's why I suggested for aggressive traders, it was pretty simple. Your back is up against the wall. It's a very easy trade out there. You've got to give it a little bit of room, and you just simply close it out if you get it close above the high of that pattern. So thank you for watching. Thank you for noticing the 3,700 level out there and asking that question. Much appreciated. I'm sure that if you had it, so did somebody else. Let's see. Do we have any other questions out here? We do not. And we've got a minute to go before we are going to that hard breakout here. Goldilocks, let's go take a look at gold. Jay had asked earlier in the den, what do the charts tell us about gold? And I had mentioned that gold wants to move higher, and I gave him a price target. And that price target was the top of the weekly profile, brand new weekly profile that had formed out here. It formed yesterday, and the top of that profile is 1890.90. And there's not anything to suggest that gold won't go make that move. Whether or not it can take out 1890.90, that I don't know, but it does look like that's where price wants to head to. In the case of silver, you've got gold moving higher, silver struggling because it's up against its descending trend line area out here. It did form a new profile a couple of days ago, and price is trading above that area. So if price can, this is the daily time frame, if price can take out those trend line areas, that would be very bullish for silver. But right now, its counter trend rally has stopped where it should have. That is at the descending trend lines. For those of you that are long gold, you're long the miners. Don't neglect U.S. dollar index that has put in a nice bottom. And it's put in a nice bottom, and we have three higher lows. Steve Rhodes with TFNN. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got a couple of questions from our YouTube channel. The first one is about ETSY. ETSY is the ticker symbol, which has completed the 1 to 1A to B equals CD to the upside. So what you're going to watch for, if there is a bearish reversal candle that forms, doesn't look like today, but if there's a bearish reversal candle that forms, that would be your sell, the D point. If it doesn't, this tells us that ETSY wants to target its next level. That'd be the 1 to 1.272 A to B equals CD price target in the 179.40 area. I don't see any topping signals as I look at my other charts out here. Prices moving higher, doing less relative energy on the weekly, but no bearish reversal candle there. So watch the daily. That will give you a signal. At this stage here, ETSY wants to continue to move higher unless we see some type of bearish reversal candle. The second request was to take a look at Amazon. Let me just pull over my white background charts here for Amazon. As we take a look at it on a daily basis out here, right now Amazon is testing a key level of support. That's the bottom of its daily profile, bullish structure daily profile, 31.2089 out there. If it fails, doesn't hold that area, could run all the way back to its September lows at a minimum out here. But right now, price is just testing support on the daily time frame. On the weekly time frame out here, price is consolidating with inside its weekly profile, 30.20 to 33.52. It does have a confirmed Rhodes momentum indicator top and does suggest that price could pull all the way back to 23.30 if these markets get rocking and rolling to the downside. On the monthly time frame, it has a confirmed TD9 count and Rhodes momentum indicator top. A price must close below 30.1341. That's its oscillator and change line to suggest that there is a longer-term intermediate term change in trend. I kind of threw in a couple of extra words there. Please don't write to my grammar teacher about that, because I'm teacher's pet right now, and I like being teacher's pet. It's just that simple. Hey, folks, thanks so much for being here on Terrific Tuesday. Stay tuned for 2 more great hours, and I'll look forward to seeing you tomorrow on Wonderful Wednesday. Have a terrific day.